Bitcoin is merely retesting its initial position. Guys, that's it. Not much of a deal. According to the Bitcoin RSI, it is currently the second most oversold market in the entire cycle. These are chances. Yes, it may chop around a little at those lows when it becomes this oversold. It may even hit a new low, chop, and rally, which will then diverge on the RSI. However, it is telling you that prices will start to rise in a month. Their altitude will surpass this one. After a few weeks, we should see a significant increase in prices in 2, 3, and 4 months. Although the market has seen an excessive level of volatility and liquidations, there are a few key indications that we really must be keeping an eye on. Raoul stated that for XRP, Bitcoin, and a few other cryptocurrencies, the stochastic RSI was in fact in the oversold position. And you should pay close attention to this because historically, you would be making a lot of money if you were purchasing whenever the daily charts showed that XRP, Bitcoin, or other cryptocurrencies were in the oversold position and selling when it was overbought. Having said that, we think Bitcoin simply bottomed out. In order to truly understand what we should be doing with our money at this time in the cryptocurrency world, both Raoul and I will be learning about and talking about this in today's video. After that, we will discuss some other extremely important updates that will have a significant impact on the markets. To ensure that everyone sees this video, please hit the like button. Then, let's begin. The chart that everyone is familiar with. The chart is this. Julian, I developed global into dollars 10 weeks ahead of Bitcoin. We had the exact same setup in global into the last Trump cycle in 2017, so we weren't sure if it would follow this perfectly. And what happened was that the cryptocurrency market fell 35% in a week before gradually rising again with chop. I wasn't sure if we would see a major sell-off to follow this pattern or if we would go sideways during that time. After a while, we went sideways for ourselves and the sale proceeded notwithstanding. It is absolutely on the same course as Global M2. What it's telling you is that last year's tighter financial conditions were caused by both rates rising in expectation of tariffs and the dollar appreciating in anticipation of Trump. That's what's happening right now. That now reverses if you look at the chart moving forward. Indeed, there will be a chop period. We will be identifying the low points in this area, and I will elaborate on that in a moment. After a time of chop, we begin to climb back up the opposite side. So you don't need to worry about it. A component of the game is volatility. You don't get 150% returns or more on the upside if there isn't any volatility on the downside. Anyway, relax, be patient, watch this unfold. So, the major daddy of all of this is financial situations. Additionally, the 3-month and 3-month rates of change in Bitcoin are influenced by the state of the economy, which is 3 months ahead. Therefore, it is clear that the dollar and interest rates from the previous year tightened financial conditions. That has now been completely priced into Bitcoin. We are therefore at the appropriate pricing point. And then, could it chop along the bottom? Till the financial conditions begin to resemble the rally? Maybe. Due to their strong correlation, it is also clear that this and the global M2 chart are quite similar. I only wish to present it to you in a different manner. The following chart is the subject of much discussion. An impending economic downturn. The economic data is showing signs of weakness. It is, indeed. And last year, the dollar was the driving force. Here we have another lead. Additionally, economic downturn is a result of the dollar's gain last year. Everyone wants the currency to be weaker because of this. In order to boost, China wants the dollar to weaken. They have a frantic need to excite. There are many dollar debts in the world. To pay off their debts, they require a declining value of the dollar. To export goods, the U.S. needs the dollar to be weaker. A weakened dollar is necessary for the global economy. First, however, we will witness the U.S. economy's decline due to the dollar's performance last year. After that, the economic cycle will accelerate and things will start to shift once more. As a result of the worse economic data, rates will most likely also drop. This supports our belief that the financial situation will improve in the future. Thus, it's still constructing a stronger argument. No, a recession is not likely to occur. What foolish all that discourse is. Economic indicators may temporarily deteriorate before improving, but this is all positive for us. Indeed. A little concerned about slower growth are tech stocks. However, once more we can use the study to look forward and observe that recovery is imminent. We saw a very similar situation the last time around, in 2017, when Trump took office. The dollar had risen in expectation of Trump's inauguration, while economic surprises plunged. After a while, that changed. The economic cycle greatly accelerated, and the dollar significantly declined. And that, despite the Fed's rate hikes, propelled what was a very huge crypto and risk cycle. You see, the most important factor here is the state of the world economy, which could be influenced by the US, China, or Europe. Either one or all of these economic powers could be involved. Therefore, we're already observing that mechanisms like the dollar-yen are beginning to move much more when the dollar declines. Since the Japanese banking sector is the foundation of the euro-dollar system, the dollar-yen is now extremely essential. They are the ones who lend dollars to the world economy, which gives them access to China and enables it to pay off its dollar debts. Additionally, it can stimulate more forcefully if the dollar is weaker. Trillions of dollars in quantitative easing are required to support the bankrupt real estate industry, as well as other non-performing credit sectors. That's all there is to it. The dollar is quite similar now than it was back then. At the time, Trump claimed that the dollar was too powerful. They have already discussed it. He has previously discussed the long end of rates with Scott Bessent. In order to get tariffs in place in exchange, they will first utilize the dollar as a negotiating tool with the Chinese, Europeans, Canadians, and Mexicans. A weaker dollar that benefits everyone will be given. Then we could all proceed with the global economy, which ought to be robust. The rear end of rates, such as rates for 10 years and so forth, that will benefit you all as well because corporate borrowing and mortgages will decline, and that boosts economic growth and gives everyone more money. All this is yet to come. They have stated unequivocally that's their goal. This cycle was perfectly followed by global M2 in 2017. Identical tariff policy and the same type of administration. Dollar had the same response. The same was true for the markets. Again, don't expect these to be flawless, but do anticipate this to begin to happen once more. M2 will continue to rise throughout the year if this is the case. If so, riskier assets like tech and cryptocurrency will perform well throughout the year. Don't expect perfection once more. Although it won't be precise, it will be sufficiently close. I fail to see the rationale why anyone who tells you otherwise is merely making up stories and why that won't be the case. We perform a great deal of analysis. On all of this, we have hundreds and hundreds of charts, possibly thousands. I must admit that there are a few distinct dynamics at work here that I had not previously taken into account. The most significant point Raoul made, in my opinion, was that these tariffs will actually play a significant role in quantitative easing. I hadn't given this much thought before, but from the U.S. perspective, since they do hold the world's reserve currency, this makes a lot of sense. Since the economies of China, Mexico, and the majority of Europe are currently experiencing severe difficulties, they can utilize quantitative easing as a negotiating tactic. Therefore, they will require the World Bank to take this action if they really wish to have some stimulus. The United States will have to print that money for them. Naturally, the United States printing that money will reduce tensions related to the collapse of the Chinese real estate bubble, among other issues. And this would undoubtedly benefit all nations, but at the moment, the U.S. is still concentrating on quantitative easing. For the most part, interest rates have remained unchanged, but they are still being lowered. The United States can start the money printer and start cutting rates again after they've determined that they can maintain their tariffs, which the rest of the world will have to accept. That's why I believe they want to make a deal with Raoul.